Okay, well, the only thing that would change based on being a first-time homebuyer would be the state transfer tax. So for the state of Maryland, it's 0.5% of the sales price, generally split equally between the seller and the buyer. So that would be 0.25% of the sales price to each party. And if you're a first-time homebuyer in Maryland, the buyer is exempt from their 0.25% of the sales price.
Welcome to Sold 100 TV.
Hello and welcome to Sold 100 Real Estate TV. My name is Billy Okoye and I'm going to be hosting this show again today. Today we're just going to, answer a lot of questions that's coming about title insurance. And we went out there to look at who can really do justice to all these questions. And we found no other person but one of the best in the industry. I've used their company since I started my career, really many years ago. And in her very busy schedule, she agreed to come in today to, can I answer all the questions? I'm going to throw it over to her so she can introduce herself. Thanks for coming in.
Thank you for having me. Hi, everybody. I'm Michelle with Home First Title Group. We're licensed in Maryland, D.C., and Virginia, and we've been in business since 2004, servicing those three areas.
Oh, awesome. Like I said, man, that's when I started my career. So now you know, all right? Call me old in the business. But so thanks for coming in. So you know how we get our questions in. We just open it up and they email their questions, they text it in, and we kind of joke with them to sell it in. Okay. And one of the ones that is top out there is title insurance. They're asking, what is title insurance? So can you briefly explain to us what title insurance is?
Sure. So title insurance is different from other insurances in that you pay for it once when you buy the house and there's never any additional premiums. The cost of title insurance is based on your purchase price and it protects you for as long as you own the home, whether it's 1 year or 100 years, against any issues, liens, judgments, lawsuits, unreleased mortgages from anyone who's owned the house prior to you. So the basic function of a title company is four things. One is to do a title search where we go to the courthouse and we search the property for the last 60 years and everything that's ever been recorded against the property comes back for our review. Second thing is to issue title insurance. So the lender's title insurance policy as well as the owner's title insurance policy. The third thing is to handle all the funds in the escrow account. And the fourth is to manage closing and all the parties and sit down and explain the documents at the settlement table when we get to that point.
Wow, so those are four segments of the title insurance company.
Yes.
So do the title search, which is key, guys. You don't want to buy a property and turn around, 2 months, 1 year down the road and there's a title issues, and ownership, problem, or
right.
Your neighbor's home is crossing over. All right, so great. So that's that. And what kind of title issues do we usually see with clients after they get a title insurance?
Some of the most common title issues are unreleased mortgages from prior owners. So if you go to settlement, buy a house, the seller had a mortgage, the title company paid it off, and it just didn't get released. That's very common. The abstractors who go to the courthouse and do the 60-year search do a fantastic job. They're very meticulous and careful, but there could always be unforeseen issues as well, such as an heir to an estate who feels they have an ownership interest in the property, or the courthouses have been very behind, especially the last couple of years due to the COVID pandemic. So there could be something that wasn't recorded or got recorded shortly after the house was already sold.
Oh, wow.
There could be things such as a power of attorney that wasn't valid or documents that weren't signed properly. There's so many different scenarios. And title insurance, if you have it, protects you from any of those instances. So if you didn't have title insurance and you went to sell or finance the property and something like that came up, you would have to hire an attorney to fix it on your behalf. Whereas title insurance, you don't have to worry about it.
Wow. So in the real sense, is insurance that you don't have it and don't need it, than need it and don't have it?
Absolutely.
Right?
Yeah, I mean, the thousands of dollars that you would spend to try and correct something on your own. Additionally, let's say you bought the property from an investor and there were permit issues. The title insurance policy could protect you from permit violations.
So what should people do when they run into issues like that? Because that's the other question is, when do we know that the insurance should cover the problems that we have?
As soon as you have a problem, I would call your insurance company or your title company. If you know that your client has an issue, you call me, we figure it out, and then we turn it over to the national insurance underwriter.
Great. Okay, so you guys heard that now. You're not alone. You're not alone in that. If you have any issues with the homes that you already have, and somebody comes, oh, this house belongs to me, or you want to put a fence in your property and they're not able to do that because there's cloud on title. That's another thing. What is cloud on title?
Cloud on title could be any number of things. That's any kind of cloud defect, right? So it could be where, let's say, a husband and a wife owned a property together and they got a divorce. Well, a lot of people don't realize that when you get divorced, your tenancy automatically changes to tenants in common. So then let's say the husband passes away. Well, the wife thinks that the property automatically goes to her, so she signs a deed conveying it out to a third party. That's a cloud on title because there should have been an estate opened for the husband. She didn't have the right to sell the whole property because they were divorced. That's something that I've seen that many times actually. Another cloud on title could be it was a bankruptcy situation or a foreclosure situation in which one of the creditors weren't notified. A homeowners association wasn't notified. Yes. That's happened frequently.
Yes, I think we had that one of the recent cases, homes that we just recently bought. Now, greatly, you talk about when there's the case of a divorce and one wants to get their name out of the deed. What is the process? Sadly, it does happen, and I want my name out of there. What is the process of getting their name out of?
It's super easy. It's just one document. It's a deed. And there's no transfer and recordation costs on a deed pursuant to a divorce. So you call us, we do it, you sign one piece of paper, and we record it. And you definitely want to do that because once the divorce is final and the tenancy, like I said earlier, changes, that opens the property up for any claims or judgments or liens against the two parties individually. Whereas when you're married, claims against the individual parties don't affect the property, other than federal tax liens.
Okay. All right. So the other question we have is, so I own a property and I want to hand it over to my kids. I want to hand it over to a significant other, or I want to hand it over to my partner. What is the process of transferring that today? I know there's a consideration. Is consideration like $1 or what dollar amount it's acceptable to be a consideration?
Well, I guess it depends on what you're trying to accomplish, right? So if somebody is adding a child for estate planning purposes, there's not going to be consideration. You can do like a life estate deed where, you have the parents in the house as the life tenant, and upon their passing, it automatically conveys to the children or whomever as remaindermen. In that situation, there's no transfer and recordation. It's $60 to record it. Okay. In Maryland, unfortunately, there's no clear-cut answer because so many counties have different rules. Like in Prince George's County, for instance, you can do a no consideration deed, but if there's a mortgage on the property, if it's not your child or your married significant other, it's taxable. So it just depends on the situation, but you can add anytime family members. It's just whether or not you have to pay transfer or recordation costs. That's going to be different county by county based on the scenario.
Okay. All right. So if it's relation, if there's a relation, a blood relation, it's $60?
Not necessarily. If it's parent-child.
Or parent-child.
And there's no, it depends on what county. So if it's Prince George's County and there's a mortgage on it, even if it's parent and child, it can be taxable in half the outstanding mortgage.
Okay.
The only thing that I can say for sure that's not taxable is husband and wife.
Okay. Okay. Husband and wife, not taxable.
Yeah, every other scenario, it's a possible transfer tax situation.
Okay. All right. So, guys, you've heard that. If it's husband and wife, is not, if not, a little bit of money, but you still get your wishes accomplished. I mean, it's
And
not
sometimes there's
impossible.
ways around it too,
Okay.
depending on what the situation is, the type of deed you do, or just adding someone, or
Okay. And another question out there is type of ownership. What are the type of ownership? If they're husband and wife, they should own that property in what type of ownership? Tenant in common or?
well, they can choose. The three ways to own property are tenants by the entirety, joint tenants, or tenants in common, or sole owner, right? So most married people take it as husband and wife tenants by the entirety, but there could be a situation where the couple is on their second marriage and they have children from the prior marriage that they want to take care of. So they may buy property with their individual assets and not necessarily hold it as husband and wife tenants by the entirety, because if something happens to them, they want their 50% to go to their children or their heirs. So the individuals can choose whichever way they want to hold what makes sense for them. But husband and wife tenants by the entirety has right of survivorship, so it automatically goes to the surviving partner when the other one passes. Joint tenants is for unmarried people, but also has right of survivorship. So if you and I own a property together as joint tenants and I pass away, it automatically goes to you. And then the third way is tenants in common, where it's percentage ownership. So we could have four of us that go in together and buy an investment property, and we each own 25%. If something happens to me, my 25% then would go through probate. So somebody would have to open up an estate, be appointed personal representative to convey my interest in the property.
All right, so you guys have that. So as a title insurance, can you kind of explain to us the state transfer recordation taxes and how does that work? In what percentage is of that should first-time home buyers, or even home buyers, worry about?
Okay, well, the only thing that would change based on being a first-time homebuyer would be the state transfer tax. So for the state of Maryland, it's 0.5% of the sales price, generally split equally between the seller and the buyer. So that would be 0.25% of the sales price to each party. And if you're a first-time homebuyer in Maryland, the buyer is exempt from their 0.25% of the sales price. So also with state transfer tax, keep in mind it's one time ever. There's a lot of loan programs and down payment assistance programs that consider people first-time home buyers after 3 years of not owning a home. But regarding state transfer tax, it's one time ever.
One time. So just pay the one time. All right, so that's great. Thank you so much. Thanks
You're
for
welcome.
coming in.
Thank you for having
last
me.
thing I want to pick your brain on is this changing market. Are you guys seeing the low files? What kind of activities are you guys receiving? What kind of feedbacks are you guys getting in settlements now?
I think, well, people that have to buy and sell are still going to buy and sell. I feel like we're in a very transient area. There's always going to be people needing to come and go in this area. The rates are higher. They're not as high as I've seen them. And if you look at the last 30 years, the average rate has been 5.5%, 6%. When I bought my first house in '94, it was 7.5%, and everybody was like, "Oh my gosh, that's fantastic!" Over the last 3 years, I feel that we've gotten a little bit spoiled, and it's not the normal. That's not sustainable long term. And I think we have to educate people. Rent is 100% interest.
Exactly.
You're going to build equity for yourself and
Yep.
pay 7% right now,
Yep.
or build equity for somebody else and pay 100%.
Absolutely.
So I
Absolutely.
think we as professionals in this industry just have to start setting expectations. The inventory is still low. Yes, it's slowed down, but Has it slowed down to more normal where it feels slow because the last 3 years with COVID have been insane and busy? Or has it really slowed? I think we're just getting back to a little more normal. And maybe people are getting used to being able to travel and take a vacation, and we have the holidays coming, and I really feel that come January we're going to have a fantastic spring and be fine.
Yeah.
Hopefully more inventory will be coming on board and the buyers will get back in the game. I just think, when you get scared, you back off a little bit and then you get back in.
I agree. Totally agree. The one thing that I picked from what you were saying is that renting is 100%. You renting, you're throwing away money. Why not embrace your 6% now? Why don't you embrace it and kind of go with that program, the buy down?
Yeah.
Where they let, buy down the rate now, and as we always say, marry the house and the rates, because you cannot refinance as they come down.
And talk to your lender about adjustable rate mortgages. Those are still much lower and you can refinance. If you're planning on staying in the house 5 to 10 years, it doesn't matter. Take the lower rate now and then refinance.
And date the rates. All right, so thank you very much for spending your day today.
Thank you for having me.
We appreciate you coming in. Any last minute words to our viewers and how they can reach you? Here, you guys are in the DMV. Any last minute words on how they can reach you, also with the office phone numbers?
You can check us out on our website, www.homefirsttitlegroup.com, or you can always call us, 1-800-490-0570.
Great company. We use them forever.
Thank you.
All right, so again, thank you. But one last thing, no matter the condition of the property, if you want it sold, we'll get it sold here at Sold 100.